Good evening, everybody. All right, hope everybody had a good holiday. All right, so today was not the day we were looking for, but it wasn't unusual that we saw the market heading down. The fact that it was down 400 points at one point was unusual. So as we saw last week, pretty much if you drew parallel lines right through the bottoms, here, this is our trend channel. So after we saw that bearish harami coming back through the T-line and the 50, told us we were probably coming back down to test the lower end of the trend channel. So it'll be pretty important to see how they open this market tomorrow. If this support level gets breached, then we still have a gap down here to fill. So this is more of, at the beginning of the year, they had everybody evaluating where the market was going to be at the end of 2016. Problem with doing that exercise is nobody knows where it's going to be in a year from now. Anyways, all right, so do we see the gap? There's a gap way over here. That could be the next target. All right, the NASDAQ had a little bit more resiliency today. Came back up toward the top of the range, even though it was down 100 points. We can see what it did intraday. Closed just above where they... Oh, what did I just do? That wasn't what I wanted to do. Closed up here at the top end of the range. So, and it was trying to support right here on this lower trend channel. So once again, it'll be important to see how they open this market tomorrow to see whether they're planning to keep it range bound. If they break this lower level, I don't know if there's probably a wee little teeny gap right there that could be heading lower. All right, so with a big day, the dollar was trying to pick up a little bit of steam, didn't do too much, but gold did a little morning star signal. Bah. Did a little morning star signal today. This is trading after hours. So anytime you have kind of that flat movement and then you see a morning star signal, that tells you there's kind of a slingshot effect ready to happen. So gold was acting better. That's why we saw things like Nugget starting to pick up some steam. All right, so anyway, let's see what else I got here. All right, so usually when we come out of the chute on the first day of the year, that's because during this time frame, most of the money managers around the world are taking an evaluation of their portfolio and deciding what the next year was going to bring. Babas, you hold on to your requests until we let Jim do the double line. And then because of the amount of people we usually have in here, you probably want to keep it to 2. Yes. So today was an unusual day. I think it was the worst start of a year since 1939. But as I mentioned before, it wasn't a surprise that it was trading down because we could see what the direction was. We had a bearish harami at this little resistance level. Then on what day was it? Thursday, it traded below the T line, pretty much telling us that this level was going to act as a resistance, making our next target the bottom of the trend channel. So did we expect for it to get there in one day? Definitely not. But that might be a good thing if they open this positive they've kind of washed out everything on the first day of the year. Commodities. Whoops, we did gold. Crude oil started out nicely today. They opened it here, traded it up, and then faded. So right now there's still no great resiliency in crude oil, which is where you kind of observe the obvious, until you see something dramatic, another big strong signal telling you this downtrending channel has been broken. Got to kind of assume that at best you're sideways in crude oil. It looks like it's trying to base, but there hasn't been any real bullish confirmation. Interest rates, just sideways. Everything is sideways. So there's nothing out there that's really got any great conviction to it. We've been long coffee. Coffee came all the way down and hit the moving averages and bounced back up. It was trading pretty close to the top end of the range today until right there in the final few minutes when it backed off. But still looks like coffee's in an uptrend. And we were been short soybeans, which also looks like it's got a trend channel in progress. So we're targeting down here somewhere on soybeans. Again, these trend channels are obvious. That's the range that there's buyers and sellers, and it obviously ebbs and flows back and forth. So once you can see a trend channel setting up, everybody can see where it's topping out, and everybody can see where it should be supporting. And usually there's not a whole lot of buying until they get to the support level. Then there's usually not very much selling if it's an uptrend to the not very much selling until they get to the resistance level. I think I recall someone saying that the year of the market was substantially higher, I hope. I think I recall someone saying that the year the market was substantially higher, I hope. Glenn, I don't understand what that said. Okay, so if crude oil seems to be bottoming out, got to see whether they're trading just above. Let's see if I can do this. Oh. Yeah, no, they didn't get above it. Not above that downtrending channel just yet. So it seems to be basing. For long-term holds, we're looking at this one right now. PBT, Prudhoe Bay Royalty Trust. I forget, it pays around a 10% dividend yield. And had a little morning star signal on a stutter step. Notice that this was not really a signal here. This is why I always say be very diligent as far as looking at a signal. This is not a signal. It's not a bullish engulfing signal because it didn't open below the previous day's close. It was just an up day. So when you see something like this, you have to be a little bit more suspicious that this is a reversal. It could be a bounce, but not a reversal. Now, when it comes back and does this signal, a Morningstar signal, that's telling us a whole different story. We've had buying, sold off, and now we have a buy signal. that tells us that the bull stepped in, the bears knocked it down, and the bull stepped in again. Mario, no, just because if it, no matter what direction it trades tomorrow, even if it trades positive, it's still caught in the trend channel. Now, I'll get to what is being kind of identified out there, but let me get through some of the charts, and I'll be discussing which sectors seem to have some strength right out of the chute today. Still watching this one, and we kind of discussed this one this morning because it was in the bobble. Notice that we had the J-hook pattern hit the first resistance, sold off, but notice where it sold off to. They couldn't close it back below the T line. If they open this positive tomorrow, breaking out, that tells me wave 1 and wave 3 are going to be about the same. And with it paying you a good, I think it's a 10% dividend yield, this is good for a long-term hold. How long do you hold things in your long-term account? Do you use the weekly charts? Yes, the weeklies and the monthlies. And I don't know what this one looks like. Let me see if I can find it. There's the big belt hold signal on the weekly. And then on the monthly chart, there's kind of the big hammer signal. Still watching for it. It could move up 50% back up to the $33 area just to get to the monthly T line. If it breaks through there, you've got some good running room. Plus, for the long-term hold or investor, you're still collecting that dividend. So we're going to be writing up a lot more on the long-term situations this coming year. The only reason we haven't up until this point is because, as we've seen in the market for the past 12 months, see if I can make this. I'm still on a monthly. At least for the last year, you can see what it really did. It wasn't a trending market. It was more of a consolidation type market. And it still looks like it could be a consolidation market. That's on the week or on the monthly. This is the weekly, which also isn't telling you it has any great direction one way or the other. Oh, yeah. You can analyze it's not like we have to analyze any one index camel, because we can analyze all of it in a matter of a minute. We can see what all of them are doing. So it doesn't matter what the S&P, usually the S&P and the Dow are going to be pretty much in tandem, whereas the Russell and the NASDAQ are going to be pretty much in tandem. Okay, let's see. Where am I? I'm going to get off the weeklies and back to the ones. So here's, again, that CEQP has got a very nice bobble pattern setting up. So if it opened positive, your next target could be the recent highs, which would be a decent percentage, and then up to the 200-day moving average. Now, we've been long WTW or went long WTW based on the inverted hammer, doji, gravestone doji, bullish confirmation, gap up through the downtrending channel, above the T line, above the 50, and above the 20. And notice what type of day it had today. Even though it sold off, excuse me, you can see that they were buying this, they were trading it above where they opened it. So that instantly tells you there was some buying going on once it opened. So it wasn't like they were, just because it was down a buck doesn't mean it was selling off. It opened lower and started trading back up. So that graphic pretty much tells us they weren't selling this off once it opened. That's one you still want to keep an eye on. Now here's a few others that you want to keep an eye on. I know in the chat room, a lot of people have been following, whoops. following SUNE. Nice big bullish engulfing signal off the 20 back up through the T-line. This little downtrending channel, if it opens positive, kind of a rough fry pan bottom, but definitely a classic where you have a fry pan bottom breakout. It's pulled back to the support levels of the moving averages. I'll see if it starts moving positive from there. Not an evening star in WTW. Where should an evening star occur? When your stochastics are in the overbought condition. Right now, remember, just because you see a pattern or a signal doesn't necessarily mean it's a signal on depending where you are on your stochastics. So I'd look at this more as a bounce up. Now we're in a double doji situation. I mean, consolidation, indecisive, consolidation, indecisive. If it opens positive tomorrow, that means the consolidation after the buy signal is over. Oh, CEQP has a annual dividend of 26%. That doesn't seem right. Let's see. No, Thomas, this is the one thing you want to learn about candlesticks is let the chart tell you what's going on, because everybody can come up with an opinion. Yes. Yeah, so if you listen to Kramer, you probably won't be making very much money. Let's see. All right. So a very nice looking chart is Scotty. There's your classic. There's your fry pan bottom. There's your strong price move. There's your profit taking out of, and what's that kind of represent? Your J-hook pattern. And notice where they pulled it back to. Once you break through a resistance level, they'll come back and test it as support. So you've got a lot of information on this chart that is just common sense. First of all, we did the we started buying this one. Excuse me, I got something caught in my throat tonight. Right here at the bobble. Notice where it failed at the 50, but it didn't close below the T line. Good place to be taking profits and then buying back. Where was the next target? The 200-day moving average. Okay, I'm looking at the dividend information on CEQP. So once it goes through a resistance level, what do? They usually come back and test it as support. So you've got all the elements in here that make this a high probability trade. Fry pan bottom breakout, moved away from the T line, broke through the 200, started seeing sell signals. Your gap up doji at the top, selling off. Now you've got a left-right combo. The prospect would be that if this moved up from 25 to 55, that we could be moving up 30 points from here, taking you in about the $82 range. I bought, right on the close, I bought some calls on Scotty. If it opens positive tomorrow, we'll probably be putting stock in some of the accounts and probably picking up some more of the calls. Let's see. 25 to 55. That's 30 points, isn't it? 30 points from, let's say, the $52 area. Is that 82? Today I bought the the January 53s. I bought the Januaries because right now, as a matter of fact, I had to go buy my desk calendar. I guess we only got 2 weeks for the third Friday, which would be on the 15th. But I figure in the next 2 weeks, they could be up substantially if this pattern works out like it should. All right, CEQP has a dividend of 2.64%. All right, so Scotty's got an excellent looking chart. Fuel cell was brought up today in the chat room. There's your kind of flutter kicker setup. Down day, gap up doji. If it opens positive, and also today, I don't have it on here, but it had huge volume. So there's been a definite change of investor sentiment, making a target. I think there's a little gap right here. Then you're 50, and then there's another gap up here. So there's could be a substantial move to the upside. Right now, yes. Oh, you could do spreads on it. I didn't realize we were that close to expiration. I didn't look at the any spreads. I just went with the straight out calls. Okay, fuel cell. So again, if that's the news, look for if it opens positive. Remember, that would be our flutter kicker telling us there's going to be more upside. And then even if this is a target, this is a target, or this is a target, we don't know where. I mean, this is a strong reversal. We don't know where it could go. So we put everything possible on here that would indicate what the target might be. So if we put a Fibonacci retracement number on here from this level down to this level, there's one. There's the 50% retracement right there at the gap. And there's a 62% retracement right at the 50-day moving average. So now, does that mean one of those is the target? Not necessarily. What becomes our sell signal? When we see a sell signal, a candlestick reversal signal, we're just seeing whether they occur at one of these places, which is where everybody else will be watching. CNX, the opposite, say the opposite, where Scotty, had the opposite. What was I doing the opposite of? They came back and used the 200 as a support level. In this case, you've got that little cup and handle where it came up through the 50 and now using the 50 and kind of a morning star signal as support. So wouldn't be afraid to be buying this trading tomorrow. Now, the reason I'm not afraid to be buying some of these is we can see what our relative strength was. Market was down 275 points today, and there's still stocks that are trading positive. So what that does for us as far as scanning for potential moves is seeing which ones were acting strong in a down market. DDD would have been a good short had it opened lower and started trading lower. They immediately turned this around. And when I say immediately, if I was ready to go short on this one and I saw it opening lower, I'd be getting my sell button in place to short the stock. But if I saw it immediately start trading positive, I'm going to say, oops, wait a minute. They're buying this yet. Even if they bought it and then came back down through the open, then I'd be more inclined to go ahead and short it. But in this case, they kept right on buying it today. Yes, if it closed halfway down this candle tomorrow or even traded halfway down this candle tomorrow, I'd probably close it out because with a left-right combo coming up through the 50 and the T-line, you want to see it stay pretty strong. You definitely don't want to see it come back below the T-line. You want to see that this buying had a reason behind it. You want to see continued buying. If it had enough strength or weakness to come back down through the halfway point, that just tells me this was some sort of pop I want to be back out of that trade. All right, a few others. PEIX. You can see the cup and handle and where did it close today. Opened lower and immediately started trading positive, closed above the 50. Excuse me. Just above the, or just above this little slow curve breakout and the 50. Another one that's telling you that there was buyers in there from the open today. OCN, one of the banks, was acting stronger earlier in the day. So this is a case where I wrote it down earlier because it was trading up here doing kind of a morning star signal. So if you were buying it today, this is the perfect example when you hear me say, just don't let it close back below the T-line. Because if it closes back below the T-line, it tells you there isn't any strength there just yet. If you bought it up here, this is one of those cases where you want to close it right back out and wait for the next buy signal. Because right now, there's nothing to tell you there's any buying strength. You have a long-legged doji, your stochastics are heading down. Nothing to tell you what to do until they open it tomorrow. J.C. Penney, big bullish engulfing, and notice where it occurred. Right about the same level it bottomed out before with a doji, bringing it up. What do we have going on here? A double bottom. So if you start seeing strength, especially if they get it up through the 20, which also coincides with this downtrending channel, that tells us our next target is probably the 50-day moving average. Is there such a thing as a left-right, as a reversal left-right combo? Is there a such thing as a reversal left-right combo? Mario, that's what the left-right combo is a reversal signal. Means short? Yes. Here's your left-right combo up here, telling you get ready to go short. So remember, a left-right combo is a day of indecision followed by a bullish engulfing signal. Doesn't matter which way that day of indecision is and which way the bullish or bearish signal is. All right, so usually on the day coming out of the chute to a new year, there'll be sectors that people decided they're going to be buying. And as you can see, a lot of the transportation stocks were acting well. This is TGP, maybe not anything spectacular, but when you start adding up the other ones that were working well in the transportation, if you can see that there was a lot of transportation stocks acting well today, that gives you kind of a clue that they're buying that sector. Yeah, Mario, were you thinking of a harami? The opposite of a left-right combo is a kind of a bullish harami, telling you the selling has stopped. So anyways, this sector, okay, well that's your bullish harami. A big a day and then a doji type day inside the previous day. Yeah, and remember, anytime you have a doji and a combination pattern, that's usually a little bit more indication that indecision that next day is going to have a lot more strength than just a regular harami or just a regular day or regular signal without a doji in it. Is GLOG a GLOG may not be a transportation index. Oh, it was. A harami tells you after big selling, and this is where knowing, again, the harami is one of the 12 major signals, pretty much tells you the selling has stopped. Then if you see it open positive the next day, it tells you not only has the selling stopped, but the bulls have now stepped in. If a bullish harami has a red candle, and this has been a little red candle, that's called a homing pigeon. It's still a harami, but it's not as powerful as a bullish harami. So if you see a big red candle, then it opens positive, another red candle, an inside day, excuse me, harami, yeah, then you look for positive trading after that. Again, it's called a homing pigeon. It's not quite as strong as a, what if it's halfway up? The further up the harami forms, the more kind of acts as a barometer. The expected uptrend is still on us, or in progress. All right, China down another 3%. All right. Let's see. SA, oops. One of the gold stocks, it has this kind of little fry pan bottom, and notice where it was supporting, right off the 50, supported on the 50. Now we're right at a breakout level. Let's make this a little bit smaller. Getting to the point where you could be looking for another wave to the upside. So, oh yeah, I've had a tickle in my throat here the last couple of days. Fortunately, I don't have to go outside. So this one, watch the gold stocks and watch the energy stocks. This is Southwestern Energy. And there's our pattern. This is what we call the double doji, where you have a indecisive day, it pulls back as another indecisive day as a doji, then they open up positive. That tells you there was consolidation. Let's make this bigger yet. There was consolidation going on, but it was not decisive. It was indecisive. Usually, so you get ready when you see a double doji, especially when your stochastics haven't gotten to the overbought area. Get ready to buy on positive trading the next day, because that's a high probability pattern that the profit taking during the uptrend is over. More than likely, it's coming up here. There's a gap to fill right here. Looked like they filled this gap right here. So the prospects of it going up to the 50 is pretty strong. That's probably true. I should. Oh yeah, the turkeys. We had about 6 big ones out there today, as far as the turkeys. Smith & Wesson has been acting well. There's kind of your cradle type J-hook pattern. There's your left-right combo, doji, bullish engulfing signal. This one I wouldn't be too afraid to be buying on positive trading. Definitely want to watch, I hate that thing, see what happens once it gets out through this level. If that's the case, wave 3 would then be in progress. Excuse me again. Here's a, hold on, I gotta do this. Yeah, I'll go get a bottle of toddy. There's your little kicker type signal. And this one I think also had big volume today. So I'd be ready to buy this one on positive trading tomorrow. Does the number of days between the cradle have any significance? Not, yeah, in the sense that the longer something, what was the one that we were looking at? Oh, Smith & Wesson. Remember, anytime you see a long period of indecision, and then they make their decision, it usually has a good prospect of the longer this period is, the stronger the next move is going to be after they've made their decision after that indecisive trading area. The pipelines. Here's PAA. You can see what type of pattern it's doing. Notice on the pullback, this is why you want to know what the nature is of each one of your signals. The pullback after 4 or 5 days is very indecisive, and where did they not close it? A wild turkey, that's right. They did not close it back below the T-line. So that tells us if this is wave 1 and this is starting wave 3, what's that going to indicate about the 50-day moving average? But this move right here is going to take you up through the 50. Oh, I don't know. On Smith & Wesson, if this is wave 1, which was approximately 6 points, I'd look for it to move up into about the $28, $29 range. Let's see. And then there was SWNC. Another, did we do this one? Looks just like SWN. Another one that has a good chart pattern to it. Now Lulu, same scenario. Notice where the J-hook pattern occurred. Right here at the breakout level. Let's make this a little bit smaller. And you can see there was a resistance level right in here. The J-hook pattern is more indicative of what's going on in investor sentiment right now, which is wave 1, wave 2. Where's wave 3 likely to take us? At least up here, which tells us this area with the J-hook pattern being breached now has a strong move from here. Oh, so Smith & Wesson is up another buck, so that means it's up just about here. So if they've gapped this up through this area, remember, anytime they gap up to a spot where they know there's resistance, it usually tells you that resistance isn't going to act as resistance very much longer. HIMX did a big bullish engulfing signal today. Excuse me. I'd look for more upside on this one. And VSLR, another bullish engulfing signal. Notice where this bullish engulfing signal occurred. Right here where all the moving averages are coming together. That's that much more credence or credibility that everybody that's watching this one, whether they're trading off the 50, trading off the 20, any of these moving averages, telling us once they hit this level, now kind of a bobble. If this is wave 1, wave 3 should take you up to the 200-day moving average. And Rovi, there's your left-right combo. Doji followed by a bullish engulfing signal. And what makes this a compelling chart? Oh, that's not it. The fact that they broke through this resistance level with a gap up. Then you had your bearish Harami that told you the profit or the buying had stopped. Now they're back to where the buying is stepping back in again. So the profit taking is over. If this was a 7-point move, look for this to move up into about the $23 to $24 area. You look to the spiders for sector strength. Not necessarily, but there's easy ways to excuse me, analyze which sectors are acting the strongest, which is just doing the same kind of scanning as you would on stocks in the sector area to see which sectors are acting the strongest, which I meant to do before we got on, and I just didn't get to it. But just the fact that we can see there was a lot of transportation stocks picking up strength, or trucking stocks, and the pipeline stocks were acting well. Not that we needed to scan for those, but when you start seeing a whole lot of stocks in one sector, you can pretty much assume that sector is being bought across the board. And you can use the spiders if you need to or want to see which sectors are the strongest. But there's easy scanning techniques for doing that. COLM, there's your bobble. Notice where they opened this today, right on the T line and took it right back up. If they break positive tomorrow, telling you this downtrending channel has been broken, there's your next likely target. Good percentage move to the upside. Let's see if that's everything on the long side. I think so. So right now I'm doing a training video on how to look to take profits, which can also be converted into how to look to go short. When we see things like this, where you're in an uptrend, you're in the overbought area, and you have a kicker type signal that takes you back down through the T-line, that's a pretty good indication that they've reversed, close out the position. What percent cash are you in at this time? 0. Usually, in all the accounts, the one big factor of candlestick scanning is no matter which way the market's going, whether it's up, down, or sideways, you're always going to be able to find more positions than you're going to be able to handle. So right now, today I had a break-even day, and I was predominantly long because some of the positions that we were holding long, like PACB, actually acted fairly well going into the end of the day. So I'm pretty much 50-50. I'd say I'm probably 60-40, long to short. Things like NSR, and we're jumping ahead here. Notice what was happening here. We had a bearish engulfing signal right here at the 50, and then it started selling off. And notice what it did today. This is why you want to be able to add things to your charts. Oh, I don't know what I'm trying to do here. Trend channel. You can pretty much see there's kind of a trend channel, and now they gap down through the bottom of this trend channel. What's that tell us as far as investor sentiment? Well, if this was wave 1, this was a consolidation, and they've broken through the support level, wave 3 could be that same magnitude, which is about another 5 points to the downside. Oh, so anyways, we added some of this position short today. And somebody was, this is the reason, somebody was asking, well, why did you recommend longs today? The longs were recommended that if this market had opened positive today, things like BITA that was in a bobble, and if it opened positive, that bobble breakout would be in progress. But notice what BITA did today. It gapped down below the previous day's open and went south. This makes for a very simple trade. Excuse me. If this opens weaker tomorrow, what type of signal do we have setting up? We've got a bearish flutter kicker signal, because after a doji type day, what's our simple rule? It's going to move in the direction and how they open it tomorrow. Lori, I'd have to go back and check to see which ones I bought. Let me see if I can remember by looking at the stock. I think we bought some 23s and some 22s today for November. Not November, yeah, November. January. What one was I just looking at? I forget. That's just great. I can't even remember what I was just looking at. BITA. Okay, thank you. So if it opens lower tomorrow, we've got a bearish doji sandwich. I'm sorry, a bearish flutter kicker. Telling us there's going to be more downside. And what can we also kind of calculate on this one right now? Pretty much, you can pretty much draw parallel lines going down through here. That would make it coming back down into this range our next target. So that was Bida. How did I come across Bida? So here's another one that came out of the chat room today. Fossil. Notice what it did. After kind of a bearish signal here, it gapped down, telling us that if this was wave 1, this was consolidation. Wave 3 could be another 20 points to the downside, taking you all the way down into this area. So, and this is another one where you kind of observe the obvious, which in this case, the obvious is we're in a downtrend and they can't get it moving back up. Your downtrend could be down in this area, just coming down through the bottoms. So when they say the trend is your friend, it's because of logic that if they're selling this off and there's nobody buying, it's going to continue to sell off until you have a very strong reversal signal. Whoops, made this too small now. Did I just do this one? No, this one again. There was that kicker type signal telling you, and today with strong selling, now you watch to see how far this can go. You got more downside in your stochastics. If they fail here at the 200, they're coming back down to this level. Remember, the bigger the signal, the higher the probability that that has definitely changed investor sentiment. A lot of the biotechs were selling off. This is a strong reversal. When they took it up and pushed it, I told you they were bailing out. This one could have a lot more downside, especially with your stochastics up in this range. And NHTC, another one where you kind of observe the obvious. This is, it wouldn't be doing anything with this right now, except where do most people sell? They panic sell at the bottom. Anytime you see a gap down in the oversold area, what's the first thing you start doing? You start watching for a buy signal. But this one was more to illustrate that if you can see patterns setting up, let me do this. In this case, you can see the wedge formation. Once it broke through that, it tells you you got wave 1, wave 3 in progress. So with that type of analysis, you look for the patterns. Notice what we had on BTL. Now we've got a little kicker signal. And what else type of pattern? We've got that bearish scoop pattern. That could have a slingshot effect to the downside on weaker trading tomorrow. So this is one of the reasons why you want to know what your signals are telling you and what your patterns are telling you. Because once you start identifying those, you get a lot more insight as to what's going to follow as far as price movement afterwards. There's kind of a slow curve. There's also, see if I can do this. You can see kind of that wedge formation. And then they gapped it down through there, gapped it down through the 50. I would suspect that 200 now becomes your next target. Given the recent market is so unpredictable, I am thinking holding 50-50 long positions is the most viable approach. He's strictly based upon, yes, Shia, that's what I usually recommend to people, that if you don't know which way the market's going or the market is demonstrating a sideways mode, I mean, you couldn't be long, very long. You couldn't be short, very long. It doesn't really tell you which way it's going. So because there's 10,000 trading entities out there, and you can scan for the best bullish as well as bearish trades in a matter of less than 10 minutes every day, yeah, it's most prudent to have both long and short positions. Now, if you get a situation where you can see this type of situation setting up, yeah, obviously you don't want to be short, and the shorts will actually kind of nullify themselves. That if the market is moving up like this and you have both long and shorts, use the shorts that are starting to show buy signals. You close them out, and you're adding more to your long position. So it kind of acts as a natural movement. But in a case where the market's not going one way or the other, there's going to be plenty of positions. I say plenty of positions, a good number of positions on the long side, and as well as a good number of positions on the short side. What did I just do? TA. Well, we did that one. That broke the wedge to the downside with a gap down through that level. That tells you they were anxious to get out. There's another one that gapped down, a kicker type signal. This is JD.com. Didn't hold any of the moving averages. Stochastic still heading down. Possibility of coming down into this range. Let's see. XON. Slow curve. You can see where the downtrend started. Failure of the 200. Back below the T-line. They haven't been able to get back up above, as you can see, kind of a resistance level at the 20. So I say the 20, there are going to be times when you can see that something's resisting at a major moving average, whether it's the 50 or the 200. Other times it might be the 20. It doesn't matter where you see the resisting occur. If you can keep seeing that every time they hit that resistance level, they're selling it off, or every time they hit that support level, they're buying, yeah, just take it for granted. That's the support or resistance level. Yes, XON, one of the biotechs, which was getting hit pretty hard today. NK, this is your fry pan bottom, and this is why we always say you hold on to your fry pan bottom until you see a close back below the T-line. Well, the fact that they did a bearish harami told us they better open this and trade it positive. The fact that they gapped it down told us we want to be out of this position. And if they open this lower tomorrow, telling us the 50 is not acting as support, now we're going back down to the next support level, down in this area. C, G, and X. Kicker type signal. If it opens lower tomorrow, telling us the 50 is not acting as support, they're going to the next support level down in this area. And why would we assume that? If they open it lower after a kicker signal, which is your strongest reversal signal, that's telling you it's time to be going short. Let's see, hold on, I'm writing this one down. That, remember, the kicker signal is your strongest signal in its own right. See, we did beta. CEMP, same scenario. There was that fry pan bottom, now a doji gap down. If they open this one lower, telling us the 50 is not acting as support, long ways to the downside. And CHRS, there's your bearish J-hook pattern. There's your bearish doji sandwich with a doji gap down. They're right here at the resistance or last remaining support level. Stochastic's curling down. If this opens lower, figure wave 1, wave 2, going into wave 3. See, that's HRCX and XLRN. Same scenario. Doji gap down, kind of a bearish doji sandwich. Next target should be the 50-day moving average. So now, just like on the long side, where we can see there's a bunch of stocks in one sector moving up, you see a bunch of stocks in another sector, like the biotech selling off. That means biotech is now out of favor. You could be shorting that sector. Fold, stay long as it doesn't close back below the T line and the 50. The fact they did told us that this now is not a fry pan bottom pattern anymore. This now becomes more of a downtrending channel. And LJPC, another doji gap down, wave 1, wave 2, wave 3. Excuse me, nice. All right, let me go grab a big bottle. If this is wave 1, wave 3 has excessive downside potential. And BABA, being that BABA is, I guess, one of the Chinese stocks, you can see the resistance level. You can see the wedge formation. You saw the doji. Told us a very simple story. To stay long, you shouldn't have been long in this in the first place because it's trading below the T line. But the fact that it opened lower told us we could be shorting this one. Now, was this enough to show there was support down here? No, it just bounced up a little bit. I would still be shorting this one on any weakness, telling you there's probably more downside. All right, so that might be the reversal, that if they start whipsawing that market up strong, what excuse do people in the U.S. have for selling? That's where they start rushing back in to recover some of the positions they may have closed out today. CCRN, another one that has that slow curve, bearish engulfing signal, doji sandwich through the 50, potentially down to the 200. And I think WSH, no Pshaw. How could I not read my own handwriting? I don't know what that symbol is. WS. That's not coming up. Yeah, your worst enemy. No, still call it your best friend, because if you know you want to go short after a doji gap down, that's your best friend on the short side. Gia, let's see, your thoughts on always hunting for new ideal setups from the universal stocks versus focusing on staying with 10 or 20 stocks and trade long or short as appropriate. You can do it whatever way you're comfortable with. Now, because the scanning techniques are so easy that I don't want to limit my universe, I want to find the best possible trades out there. And the best possible trades today, or stocks today, may not be the best trades to be in 4 days from now, 4 weeks from now, 4 months from now. And because it only takes a matter of minutes to do scanning to see which ones are working the best, I'd rather, see, that's what I thought I did, WSH. No, it's not coming up. S.WSH. No, still not coming up. So I don't want to limit my universe of stocks. Now, there are some that I would trade whenever I see good setups on them. I think Bonton was one of them in the past, where it did exactly what it was supposed to do with the yeah, I don't know why it's not coming up over here. it would do exactly what the chart said it would do. But then there's times where it looks something like this, you don't want to be trading that one. Okay, that's about all I have for today. So are there any general questions on candlesticks? Scanning for patterns seems difficult. Do you scan for only the candlestick patterns and identify the patterns by the site? Let's see. No, I scan for the candlestick signals and then be able to identify what patterns that those signals might be in. So I'm not scanning for fry pan bottoms, and I'm not scanning for J-hooks. I usually have charts where I've found good buy or sell signals and recognize that there's a pattern being set up, which adds to the credibility of that signal. I'm wondering when your kids behave enhance. Oh, yes, and so yeah, back to your question, Shu. Yeah, if you've got a set of stocks that you like to trade and you can understand its nuances, yeah, do that. I don't, because I can see which stocks I want to be in and out of at any given time. But where are these easy scans? Right here, Don. We can do a scanning session in the next few nights if anybody's interested. But the whole basis of the scans is still knowing your bricks and mortar, which is knowing the 12 major signals and knowing the 6 or 8 uh, patterns. All right, I'll schedule, and I think we still have a light schedule. I will, hold on, let me get my little crayon. Oh, I know this is probably stretching. I will try to do a scanning session Wednesday night. How's that? Um, I'll use TC Net for the illustration, which is any of that information can be applied to any of the scanning softwares that people use. Scanning for patterns, yeah, okay. Is the thought process the same for the Harami and evening stars? I don't know what is meant by the thought process, but remember, there's basically six bullish signals and 6 bearish signals. And if you understand what those signals represent, a bearish Harami tells you the buying has stopped. A bullish Harami tells you the selling has stopped. An evening star signal is a 3-day. So as long as you understand each one of those signals or patterns, you know what to expect with a high probability following that. And especially if it's occurring in the right place of your stochastics. I'm trying to. Diane, when I'm swing trading, yes, my first criteria is the daily chart, because I'm planning to hold it for 2 or 3 days at least. Sometimes it goes into 10 days. Sometimes it's 1 hour later you get out. But then I also watch to see if I've got other elements on my trade. For example, when you start moving that far away that fast from the T line, then I move down to my 10-minute chart. and see what's happening. And once I start seeing weakness on the 10-minute chart, when I know the daily chart is way overbought, then I'll start taking profits. Oh, Wade, no, we usually do all our sessions at 8 p.m. Eastern Time. Is a skinny session using your Metastock? Uh, no, Metastock, we don't really need to do a scanning session with Metastock. Because the scans are already built in. All you have to do is click on them. Toss, I'll have to find somebody that knows how to do the scanning. More than likely, we will start using some of the members to give sessions, because I don't use TOS for doing my scans, but I know people in the chat room use TOS for doing their scans. So it'll be better or more informational to let somebody like that do the scans. Any scan code for McMuffin? Yes, you can write that scan code just as well as any other code. If you can say verbally say the pattern or signal, you can develop a scan for it. Okay, China's gone positive. All right, let's see. Yeah, and let's see. I'll see if I can rattle Ed C's cage and see if I can have him do a session on, because he writes formulas for all the softwares. Uh, okay, let's see. Oh, Hubert and I set up the scans for Think or Swim. Maybe I'll just have Hubert come back on and do a scan session. Okay, all right. So at least we got that established. So we want uh, some scanning. All right. Oh, Shu, I don't have any. I think if you just ask them, they'll give you some discounted rates. I see. This is one of them, the fry pan bottom, the J-hook pattern. Then you've got the cradle pattern, the scoop pattern, the belt hold signal. Um, we've got what we call the McMuffin, which is a combination of the Morningstar signal and a doji sandwich, which is the morning sandwich or the McMuffin. So if, let's see, we've got videos for members at a discount, obviously, on the 12 major signals and the patterns. I mean, if you go to our products and services, there's about 40 different training videos in there. Um, okay, I guess, Jim, go ahead and do the double line. Excuse me, and then 3.9 seconds do the next double line. All right. So there's your long-term chart, but just recently, it's done kind of your bobble and broken through. If I owned it long-term, see what the long-term chart looks like. I would suspect your first target, if it breaks through this downtrend, is the 200-day moving average. Then at that point, you're going to have to watch to see whether it's time to come out of it. Now, if this is like all the energy stocks, I probably wouldn't be selling energy stocks right now. We're in the process of buying some. Whiting, for example, is trying to bottom. What was the other one? NLG, also trying to bottom. So there's some good percentage moves, and that's all going to be a function of if crude oil prices start to kind of bottom out here, or at least base. Some of these stocks that have been thrown out with the bathwater should be coming back pretty strong. Tesla, I guess they said Tesla has had its worst day in I forget how many months. But notice what it did. When it got to the top of the trend channel, you can see those shooting star type signals and a gap down. I would suspect it's coming down at least here. Then you have to see. This is telling you if they don't support down here someplace, like on a trend channel or down in this area, you might have another move like this coming out of it because there's your shooting star doji followed by a gap down. Stochastics have a lot of juice to the downside. If you were long, you definitely want to be out of Tesla. Guild, same scenario. You're in a downtrending channel. They gapped it down. You might be near the bottom of the trend channel, but your stochastics are still heading down. I wouldn't see any buying coming into this one for a while until you get back into the oversold condition, which means you could be hovering on this downtrending channel for a little bit. Same scenario here. I would suspect with a shooting star, this is your bearish Harami shooting star. Notice how it opened and closed within this day, and then the shooting star was confirmed on Thursday. Now they've gapped it down. I would think they're heading back down to the 200-day moving average. I forget to do the biggies today. Netflix did do a hammer type signal. I wouldn't be a buyer of Netflix just yet, not until it gets back up above the T-line and the 50. But if it opened positive and I was short, I'd probably start covering my short position with the anticipation they could bounce it back up to the 50-day moving average. Apple did kind of a belt hold signal today. So this was a strong signal, especially with the market down 270 points. They opened here and closed back right about where they opened. Kind of what they call a meeting line. That's usually a very bullish sign. So if it opens positive tomorrow, if you had been short, probably want to start covering your shorts. I wouldn't go long just yet, but I'd be covering the shorts. Netflix, let's see, we did Amazon earlier. Amazon, I'd be more apt to be ready to go short on this one right now. Facebook, also getting down near the support area. Another one that I haven't been trading or haven't recommended being in Facebook at all just because there was no trend to it. And I still wouldn't know what to do with it at this point. Big lots, stay short on this one. You've got the bearish J-hook pattern in progress. If I was short, I'd stay short as long as it doesn't close above the T-line. LEI backed off, but traded positive after the open. If I was long this one still, now this is another case where if you've got a stock that's gone from 175 to 1075 or 1050, that's a huge profit for anybody. I'd love to have been in that one. But once it got up here, if you flip to your 10-minute chart, which I'm guessing was over here, let's make this you can start seeing on your 10-minute chart where the profit taking was starting. You had your evening star signal. Where were they going to move it back to? The T line. So even if you held on to it down here, what did you want to see at the T line? Wanted to see that they started to back up. The fact that they closed it below the T line told me that's time to take profits. So even though you might not have gotten the best price for it, if you were in down here someplace and got out right in here, if you just get one of those every month, we'll all retire to a big boat on the someplace. So anyways, the 10-minute chart told me when it was time to take profits. And at this point, if they open this positive tomorrow, what's it telling about our daily chart? Telling you the profit taking over the last couple of days of trading is over. They're still trying to take this up further. Now, why they're taking this one up as strong as it is, I think they bought somebody out, but I can't imagine why that would add so much equity to that stock. Flammo, nothing here. I'd stay, if I was short, I'd stay short. Today was just an up day and a downtrend. Noodles. Now that's a bullish engulfing signal. Closing at the T line, which makes this a different animal. That if they open this one positive, confirming the bullish engulfing signal and telling us the T line is not acting as resistance, I definitely don't want to be short. I may not want to be long just yet until they break out through this downtrending channel, but I wouldn't want to be short anymore. Kroger, with it closing after a left-right combo, there's your hanging man doji, followed by a bearish engulfing, and then gap down the next day. You can see where the selling was occurring. There's your evening star signal. Sold it off. They brought it right back up. Got right back to the same level again and started seeing more sell signals. Especially when your stochastics rolling over each time. That tells you that's an area that they decided that they're starting to sell. Right now, if you should be out of it. You should have been out of it with that gap down and close below the T line because you had a strong, very signal. At the same level, you had an evening star type signal just a week and a half prior. Right now, I wouldn't be in it, and I'd be more apt to go short if it came back down through this level, telling me they're probably bringing it back down toward the 50-day moving average. Starbucks is still in this downtrending channel. It may be at the bottom of the channel, but I wouldn't be long Starbucks, obviously. I'd probably stay short. But if I was short, I'd probably use today's open as my stop. If it could come back up through there, that's pretty much telling us this little downtrending channel is supporting. Meat, you stay long as it doesn't close below the T line. And here's another perfect example of when to get out of a position. You saw the doji shooting star, and today with the market opening lower, you saw it open here and start trading off. I'd have closed out the position. However, when it turned around and started coming back up through that level, what's that basically telling us? Well, first of all, it's telling you it's back in a bullish move. You can buy it back because if it closes back up above the T line, I told you the consolidation was there and it didn't close below the T line, you can buy it back. And buying it back is, after selling it here, it's just insurance that you're not holding on to something that might be heading all the way down in this direction. MNK, I closed this one out on Friday or Thursday only because notice what the trajectory was by this time. It had a kind of a bearish harami that closed near the low end of that previous candle. It just didn't look like a good chart anymore. It may have been in an uptrend, but it was a very slow, choppy uptrend. So it closed it out. With the gap down today, there's a good prospect that if they open this lower tomorrow, this one's going to come back down and test this low area at the 50-day moving average. SPMC, Here's another case where when it opened lower below the T-line, it should have been closed out. If it starts trading positive and closes back up above the T-line, you can always buy it back. So this is the part that most investors can't get their thoughts through, which is the ego process, which is, oh man, if I sell this out and then it turns around and goes back up, oh, I can't sell here and buy back here. Boy, would I look stupid. Well, we're not buying or selling on the basis of where we got out and where we get in. We're buying and selling based on what is the investor sentiment telling us. And when it's opening lower, showing us trading lower, in this case, I guess it opened down here, I told you wanted to be out. You can get back in. So you missed out on 70 cents. You probably weren't buying this for a 70-cent move. Probably looking at this to have another $3 or $4 move to the upside based upon this type of pattern. So that was the hardest part for me through the years, was closing out something and then buying it back as it reversed and headed back up. The first thought I would think, boy, would I look stupid if somebody found that out. Reality is, who's going to find out? I bet you 99.9% of the time, nobody knows what trades you're making. And probably that other 1/10 of a percent of the time, they don't care because they're having problems with their own trades to worry about. So I gotten over my own stupidity years ago. I just want to be doing what the markets tell me. FEYE, nice bullish left-right combo. You can stay long or buy this one on positive trading. ACAD, I wouldn't be long or short this one. It's pulling back indecisively, but you can see you're in a kind of a wedge with no direction. I wouldn't be in this one. TACB, we're still holding this one because it did come back up through the T-line. So we sold off some of this as it was trading lower and bought it back as it was closing them above the T-line. So we missed out on 22 cents. We weren't buying it for 22 cents. We're buying it on the basis that this might have another 2 or 3 point move to the upside. XPO, probably wouldn't be long or short. No direction to this one. AVXL, I looked at this chart, but there's just nothing here yet to make it compelling to want to be buying. I probably wouldn't buy this one until they can get it back up through the 50, because then you'd have somewhat a semblance of a scoop type pattern in progress. Dollar Tree, where I buy most of my clothes, left-right combo. Notice where this bottomed out. Left-right combo, right smack dab off the 200. So what's our basic analysis? If it breaks through a resistance level, they'll come back and see if that resistance level is going to act as support. Wouldn't be afraid to be a buyer of this one on positive trading tomorrow, especially if they broke out through this area. First Solar would have scared me on a lower open today, but it didn't trade down very much before it started to come back up. All you can do on this one is stay long. Walmart, I've not traded because it's too big and stodgy. It doesn't have any real price movement to it. So yeah, there's just nothing in Walmart. It's just too big a trader for institutions to ever want to be buying or selling it. I wouldn't be long or short Walmart. Sedge came up a little bit today after the open. No, it came up more than I thought. So you've got a belt hold type signal. Now remember what a belt hold does for you. Pretty much wiped out a lot of sellers today as the bulls were stepping back in. So on positive trading, you essentially have a wave 1, wave 2, and what's out in front of wave 3? Not very many sellers. They've been pretty well wiped out. Victor, how are you doing tonight? And Netgear, This one I would stay short. You can see the slow curve, and you can see how they kind of breach this support level in here. I would suspect they could come back down into this area, which would be filling the gap and coming down to test the 200-day moving average. OLED in a double doji, but it failed at the recent highs. Makes this very simple. It has to open positive to stay in it. If it opens lower, close out the position. Now you've got a double top, meaning they're coming back to this level and or the 50. But remember, they're going to move in the direction of how they open it after a doji. Play, all you can do is stay long as it doesn't close below the T line. Silica, another one that I wouldn't be long or short just because there's just a slow sideways move to it. You can see it's very choppy. It doesn't become interesting until they can break at least this downtrending channel and telling us that the 50 is acting as support. But it has to break out so that their next target can be the 200-day moving average. Western Digital just has never gotten out of its own way. Another one that I wouldn't be long or short only because there's not enough movement to it right now. Excuse me. I would be playing something else. There's just no direction to it. ANET, stay long as it doesn't close below the T line. RGR, if you close it out on Friday, be ready to buy it back on positive trading tomorrow. If you're long, you just stay long. Pace, oops, nothing there. We did CE QP. I'd be a buyer of this one on positive trading tomorrow. Bullish doji sandwich. Bobble breakout, making your next target the next major moving average. Disney, stay short. But if you're short after the doji gap down, I would use today's high as a stop. I wouldn't want to see it trade back up there. If it did, I'd cover my short position. Delta, nothing here. If you're short, you stay short. You're bearish engulfing that closed below the T line with bearish confirmation. I would suspect the 200 is your target. And XIV, right now, it's a toughie too. You're in the trend channel. Got to see which way it's going to go from there. Is there a good ETF to trade on transportation? Oh, I don't know. Does anybody know the answer to that? The only reason I don't know the answer is because I don't trade the ETFs. It's easier for me to find which stocks in that sector have the best signals and patterns. QSII, a nice J-hook pattern. Notice how it came back and used the T-line as support. Stay long on that one. And Avis now, ever since that bullish Harami, which told you the selling has stopped, and the confirmation with bullish confirmation after the Harami and a close above the T-line, if you're long, I'd stay long. But here's another case where it has to open positive tomorrow. If it opens lower, tells you they failed at this level and that you now have the potential of a bearish J-hook pattern. Notice what started this downtrend, the kicker signal. So you definitely need to break that, which they did. You definitely need to stay above the T-line to stay long. Boeing, that looks like it still has the capabilities of coming back to the trend channel bottom. If you're anything, you should be short Boeing. Goldman's kind of the market indicator. It might be showing that there's support going on here at this level. Excuse me. But you can see there is also this trend channel in progress, so there's really no great direction. Red Robin, stay short. Can't seem to get up above the T line. Here's kind of that belt hold type signal that told you They still couldn't get it above the T-line. I would be ready to short this one on any weakness tomorrow because you've got that slow curve heading for further lower levels. Hasbro, nothing here to get excited about. Might not be short, but I definitely would not be long right now. If I was going to short this one, I'd short it if it came back down through today's open. We did Facebook. Facebook, really no direction. I wouldn't know what to tell you on Facebook. I wouldn't be, there's just no direction to it. UST, that's a junky one. I don't know what to tell you there either. Another one I wouldn't be long or short. Ford still is having a hard time getting out of its trend channel, which again is the same scenario on most of the stocks trading over the last 2 months. Not right now. We've got some long positions on Ford, but we're not trading on the short term because there's really no chart pattern here to really sink your teeth into. AER, kind of the same scenario. At this point, with the kicker type signal, I'd be more apt to be shorting it than just watch to see what it does here at this support level. But right now, there's not enough trend movement on this one to either be long or short. Angie's List needed to stay up above the T-line, which it didn't do. However, it stayed above the 50. So with a close right here, gives you only one opportunity. It has to open positive and trade positive to stay long. I'm telling you, the 50 is acting as support. If it opens lower, tells you this downtrending channel has now broken the 50, that you're still heading lower. You'd want to be out of it. I think we did Apple. The Russell 2000 broke the support level just like the rest of them. Excuse me. Nothing here yet to tell you there's anything coming in as far as the buy side on these, especially in the small stocks. TVIX, right now, yeah, another one that you can see is in kind of a sideways channel. I don't know what to tell you there. I wouldn't be long or short this one. There's just not enough to sink your teeth into. Whoops, did that backwards. Stay short on this one. This is kind of a good example of when you start seeing a bunch of sell signals. Bearish Harami, belt hold, bearish engulfing, left-right combo, hanging man, close below the T-line. That pretty much tells you they aren't buying there anymore. It's time to be out of that position. Okay, yeah, I knew he was going to be late. Dust. This is the short. Yeah, there was a little bit of strength in the gold stocks today. Might keep an eye on those. And Nagel, I'd be ready to buy this one on positive trading tomorrow. Citigroup, another one that if you're short, you want to see it open lower tomorrow. If it opens positive, expect at least a bounce back up to the T-line. GE, GE I've just never traded because it's just like Walmart, just so slow and stodgy. It's kind of the epitome of an institutional trader. If you like it, you can stay long, but it would be a long-term hold as long as it stays above the 50-day moving average. Oops, NDX didn't come up for some reason. Win, another one I wouldn't be long or short. You can see the wedge. I'd rather buy it on a strong breakout one way or the other. US Steel, another one that I wouldn't be long or short. It's basing, but there's no buying coming into it yet. There's no real selling at these levels either. Diamond offshore. Another wedge that I wouldn't be long on short until it broke either through this level or broke down through this level. Let's see. Just, yeah, I'll see if I can get Ed on here and have him do a training session on scans and some of the softwares. Probably much better at it than me since I'm like an old dog. Can't teach new tricks. ACHN, that one has to open positive tomorrow to stay in it. Otherwise, your evening star signal is telling you you've failed. You want to close it out on any weakness tomorrow. FEYE, yes, that's a left-right combo. That's your bullish engulfing after a doji. You could be buying this one. It's just not one of your best-looking charts. Still caught in the downtrend. I would suspect your upside potential is the 50. See, we did Flammo, right? Just nothing there. PACB, where I'd put my stop. I wouldn't want to see it come back down through the T line. If it did, that tells me sellers are still in control or starting to take control. It needs to stay above the T line. Sean, I wouldn't. Yeah, I'm not buying Ford just yet because it's still not a trend or a chart that you want to play with. I like Ford because I think I own 4 or 5 of them. But right now, the chart's not telling us it's good to be either long or short this one. Okay, so they found the transportation index. All right. Oh, let's see. Yeah, left-right combo at the 200. You can be buying it. It's just you don't have anything really dramatic on this chart, but you are supporting at the 200. So yeah, still not anything that I would get real excited about because there's nothing telling me there's any great buying or selling going on. So long tails make stop losses impossible. I'm tempted to not deal with them and look only for the predictable types. You can't tell what's going to happen on any given day. Uh, yeah, you do have stocks that are, I guess, what we'd call predictable because their price movement isn't very big at all as far as intraday. But then again, their total price difference isn't. So, how do you approach the market in the morning? Wait the first minutes. We will be able to see based upon what the pre-market futures are telling us of how they're going to open it. And if the Chinese market has turned around already, that's probably going to add some strength because, let me finish this one, DUZI. I'd be ready to buy this one on positive trading because notice what the bearish Harami consolidation told us. They're probably coming back to test the T line, which they did and started buying again. So I wouldn't be afraid to be buying this one on positive trading tomorrow. Let's see. Yes, Steelers just squeaked by this year. CVI for a predictable type. Right now I'd be short this one on the bearish J-hook pattern. Okay, let's see. All right, so I've got planned Wednesday night. We'll do a scanning, just going through the basics, and then I'll see if I can conjure Ed C into doing a training session. Oh, nothing here yet on ADPT. Probably wouldn't be long or short this one. And ERVI, just because there's no direction right now. This one I'd be more apt to be long. You could see where you had that hammer type signal, kind of acting like a belt hold where they wiped out a lot of sellers and the bulls stepped back in, did the bobble type pattern. Stay long with the anticipation. Here's your first resistance level. If it breaks through there, then you go to the 200. Chesapeake, I would imagine, is picking up a little bit of strength. Yeah, it's a good bottoming action. You just have to watch to see what it does once it gets to the 50-day moving average. What time is the Wednesday? It'll be 8 o'clock. All our sessions are 8 o'clock Eastern time. And so we can give people on the West Coast time to eat and get in here. Okay, with that, we'll see everybody bright and early in the chat room tomorrow. Have a good evening.